Welcome back. The market is looking pretty good at the moment. So as we were telling you, it's a big move that we're seeing on the headline index. The Sensex is now up almost 500 points. The advance decline ratio is also very, very positive, 8:1 in favor of the advances. But we saw a slew of major announcements at Reliance Industries' 45th AGM. Chairman Mukesh Ambani says that Jio will roll out 5G services in metros by Diwali, and the full rollout is set to be completed in 18 months. More importantly, Isha Ambani announced Reliance Retail's FMCG foray, while the chairman also set a goal of doubling Reliance's value by 2027. Harshvardhan Dole, the Vice President Institutional Equities at IIFL, Prashant Singhal, the National Telecom Leader at Ernst & Young, and Harish Bijoor, brand guru and founder of Harish Bijoor Consults, joins us now on the show. Gentlemen, pleasure having you on the channel. Harsh, let me start with you. Your key takeaways from the AGM yesterday, and more importantly, what's your view on the stock now? Most brokerages have a target price which is well above the current market price. But do you think that there are enough triggers in the AGM that could take the stock to the next level?
I'll take the second one first because that's the easiest one. Well, frankly, the street was hoping for more constructive comments in terms of how the demerger will happen and possible timelines for listing of the two entities. And to that extent, it did not come through. So in short term, there is some sort of a disappointment, and that is what we've highlighted our note. But having said that, from a medium to long-term perspective, I think there are enough triggers for the stock to do well and fetch at least 15% return on a compounded basis. And the reason why I say this is as follows. Firstly, after a long time, Reliance has stepped up the investment in the core O2C business. After the 75,000 crores of capex, we can actually see approximately 20 to 25% volume growth in the business, which RIL is actually the best at, which is the O2C business, and which was missing for a long time. So that is one of the strongest triggers. Second, a strong growth outlook was reiterated on each of the consumer-facing businesses. And we saw some of the announcements such as launch of WhatsApp, enabled retailing, etc., which will go a long way in terms of ensuring and capturing the wallet share. And third, most importantly, the green energy initiatives was sort of reinforced. These three ensure that from an SOTP perspective, there is enough arsenal in the stock, which will ensure that at least 15% compounding will continue from here on. So in near term, maybe there is a bit of a disappointment, but from a medium to long-term perspective, this continues to be a favored stock in the sector.
Okay, Harshvardhan, good morning. So this near-term disappointment can be slightly bigger, right? Because the market was expecting some kind of definite timeline in terms of, demerger. But you think, that's okay. The market will take it in stride. I
think it is there in the stock price, isn't it? Relative to the broader market, the stock has not done that phenomenally well. And to that extent, more or less, it is there in the price. But what is more important is, despite the uncertain macro, Reliance is steering ahead with focus to grow its core business. I mean, for example, petrochemical consumption in India has a strong linkage to the underlying GDP growth. And if Reliance is betting big on the India growth story, I think the most logical thing was to invest in the core business, which is what it has actually done. So to that extent, as you rightly said, there is some near-term disappointment. In medium to long term, there are enough triggers for the stock to do well.
Gentlemen, good morning. Prashant, if I can come to you. On the telecom side, what was the highlight briefly? And, these new products which they showcase, right? The air fiber, the PC, the cloud PC, what can it do? Can it really spur growth in a very big way?
Yeah, I think the way the telecom sector is evolving, I think with 5G, which is going to come in with all the new products and services which have been talked about, I think the enterprise space is going to look much better. The overall sector revenue should go up. And I think, Reliance or Airtel or all the operators would have a pie in that. Apart from that, I think the other thing which is being done is this entire Open RAN deployments. and having indigenous Open RAN products, which again would be important with such a large scale deployment. And if one can replicate that to the other parts of the world, and that could also see a huge revenue upside for some of the players. So I think we are in for some big revenue growth, at least on the enterprise side with 5G. On the consumer side, we will see some growth in terms of the consumption of data with all the 5G launches which have been talked about in the industry over the next 2 to 24 months. It would result into substantial data usage going up, and that data usage would convert into some form or the other, ARPU growth, which should therefore improve the sector revenues as well as the individual company revenues.
Okay, Harish Bijoor is also with us. He's been waiting by patiently. Harish, the succession plan is now firmly in place, right, with the elevation of Isha and Anant. And a clear discussion on a succession roadmap is a big positive and critical for any corporate's, brand value going forward, and especially for Reliance's lack of shareholders. It's a step in the right direction, you believe? And do you think that this would sort of strengthen the brand value a bit more for Reliance Industries?
I think so. And hats off to Mr. Mukesh Ambani for that, I guess, in terms of putting these three silos separate and having one of his children each looking after. Beautifully, at the macro level, I would say that, when you look at India and Indian businesses, you would typically now define three corporate businesses which will take corporate India brand overseas. One has always been Tata. The Tata Trust has prevailed. And the second is Ambani, and the third is Adani, not necessarily in that order. So if you look at these three names, these three businesses are going to define the future of brand India overseas. And valuation, most certainly. If you look at it, the global branding practices are going to be led by these three. Quite exciting times ahead.
Okay. My question, I want to take that question forward with Harsh as well. Harsh, does this give you more confidence in the progression of the company? Generally, we always talk about how when there is no succession plan in place, that leads to a bit of a disappointment. Now there's a clear and crystal succession plan in place, which of course safeguards the continuity of the business as well. Would this be a big plus point from a stock angle?
Well, certainly yes. See, in the era of ESG investments being talked a lot, I think succession planning is looked upon by long-term investors quite seriously. And to that extent, what was announced yesterday should bode well from at least governance perspective. I think the next logical step will be essentially giving a greater role to each of these individuals who have been groomed or been identified to lead the respective verticals, and perhaps separation of post of chairman and the managing director or the CEO. That will be very, very assuring from governance perspective, and any long-term investor will actually look forward to this particular logical move.
Harshvardhan, since you spoke about the underperformance of the stock, and it's quite clearly visible, but some part of that is also because of what happened with the windfall tax, right? And on that export duty. Now, of course, it keeps changing every fortnight, but the fact is that the kind of models that the market might be building on in terms of the GRMs, that's perhaps out of the window. But do you think that that impact is now fully priced in, or could it hurt from here as well?
I think that impact is more or less there in the price. And that was certainly one of the reasons why the stock did not perform in sync with the broader markets. That the O2C cycle turned favorably after a long time, and for the government intervention, there will be disconnect between the underlying benchmark deltas versus what the individual companies will report, and to an extent that has also weighed high. I mean, for example, if first quarter Singapore GRMs were of any reflection, perhaps RIL could have earned entire full year profits in first half itself. But now all those equations will be revisited for this particular windfall tax. And that is, of course, one of the key reasons why the stock has underperformed.
Harish, on the announcement of launch of the FMCG business, I mean, any thoughts? I think they've got some 22 odd brands, right? Their own in their own stores, general trade, etc. as well. What is the size of the opportunity? How big can they get with their distribution? And what does it mean for the industry? I mean, are there biggies there?
You know, if you look at the retail size of Reliance to be about 2 lakh crore, and I'm saying, you know, the ability of Reliance to be in everything that possibly other organizations are in. Tata is defined as a salt to steel conglomerate, and I would really define Reliance to be a kind of a Maida to the madness of the metaverse conglomerate. So deepening and widening of portfolio, the opportunities are huge. You can be in low-end FMCG, middle end, and the top end. And guess what? You have the bandwidth for it. You have the platform for it as well. I think we need to wait for geo platforms. We need to wait for exactly WhatsApp commerce, the way it's going to be rolled out widely. And I think the competence is from being a shop at one end to be shopping at another end. These are two different things. The shop is passive, and that's what bulk of Indian FMCG companies have done thus far, focusing on the passive shop. Focusing on the active shopping format of the Indian is what possibly is the biggest opportunity that Reliance has ahead of it with its bandwidth of coverage of N numbers of terrains.
Reliance does have a very aggressive growth plan even in the retail business, right? They aim to be one of the top 10 retailers in the world. And in the last AGM, Mukesh Ambani had said that he wants to grow the retail business, triple it in the next 3 to 5 years. So I think the question that begs asking is this launch of the FMCG business this year, Harish, and coming to you on this, will it help them in any way to sort of reach that target? What else do they need to do? Because this is a very competitive space.
Oh, it is very competitive. And in fact, very frankly, Reliance doesn't have the competence of front-ended brand positioning. That is the only thing lacking. Reliance has typically, even through its FMCG foray thus far, been very B2B or very, you know, through its supermarket dealers' own brands, private labels, etc. A private label going public is a big, big move. Private label competence is back-end. Public label competence is front-end. Companies such as Colgate, you know, whether it be Reckitt, etc., have honed this competence over decades. So very simply put, you know, I would say Reliance needs to cobble together its ability to front-end brand positioning. You know, that's very, very important. And I think that will take a decade or so to put together. But again, as it focuses on shopping as opposed to the shop, I think that competence will also be built.
All right, gentlemen, it's a pleasure. Thank you very much, all of you, for being with us here on this program. It's a pleasure. Harshvardhan, Prashant, Harish, thank you very much, gentlemen. Well, in a first of its sorts, Chairman of the Central Board of Direct Taxes, CBDT, Nitin Gupta, speaks with CNBC-TV18, Stimsy Jaipuria, and shared the future plans as far as taxation policy in the country goes, whether taxpayer burden can be reduced or not. Is a conversation you don't want to miss. Listen in to some sound bites there.
Right now, against the budget target of 14.20 lakh crore, we have achieved collection of more than 4,75,000 crore, which is at the growth of around 33%. The gross collections are still better, with a growth of around 38 to 39%. In spite of more refund outgo, which we want that should be enhanced, the collections are very robust at the and going at the rate of around 33%. Corporate tax as well as personal income tax, on both the side, the collections are robust, and I think the actual picture would emerge once we get the second installment of advance tax in the month of September. So a better analysis can be made around 20th of September once we get the figures for the second installment.
Okay, that's the CBDT chairman, but let's move on now and talk about the consumption.